Hi, everyone. Thank you so much for joining us today and welcome to our Ask Me Anything event. As you know, today's session will focus on all things SCA, or Strong Customer Authentication, a topic which I know remains very much top of mind for many people. My name is Emily Goetze, and I'm a Product Marketing Manager here at Checkout.com, and I'll be the moderator for today's event. I'm delighted to be joined today by Milena Shishkova, who is one of our senior product leads here at Checkout.com. Hi, Milena, how are you?
Hi, Emily. Thank you for the introduction. I'm very well, thank you.
Great. So nice to have you here today. Milena, do you want to start off by briefly introducing yourself to our audience and telling them a bit about your role here at Checkout.com?
Sure, thank you. So I'm a senior product lead at Checkout, and I oversee the fraud and risk product group, within which is, of course, the authentication service. And for the last maybe 2 years now, we've been busy building a 3DS2 server and helping our customers manage the regulation around strong customer authentication and the strategy to optimize payments with strong customer authentication.
Great. Thanks, Milena. So in terms of how today's session will work, we have about 45 minutes together, and we'll start off with Milena giving us a quick overview of what the first few months of SCA enforcement have looked like. At that point, we'll open the floor to the audience. So as the name of the event suggests, this is your opportunity to ask Milena any questions you might have around SCA, whether it's broader questions around the implications for consumers and businesses, or perhaps more specific questions around particular exemptions or particular use cases. It's really up to you. So we'd encourage you to input any questions you have into the Q&A function. You can choose to ask your questions anonymously, but if you do leave your name, it means we can follow up on any questions we might not get the chance to get to today. So with that, we'll get started. So Milena, tell us how it's all been going. It's been an interesting couple of months since the SCA deadline. What have we seen in the first couple months of SCA enforcement?
Great, thank you, Emily. Let's get started. Okay, so indeed, it has been 3 very eventful first months of the enforcement of the regulation. And of course, in a second, we'll go through a couple of slides just to remind people of where we are with the timelines in the different countries that may or may not have allowed some flexibility, and look at what everybody is really worried about. What is the performance rate really? But just to give a little bit insight from January and February, and then we'll look at the data for March. January started really slow and quiet. So markets without official flexibility also allowed some sort of flexibility. So we didn't see big disruption on the market. And a lot of issuers were still accepting non-compliant transactions or transactions that were not processed by authentication. With February and March, as some countries also moved to full enforcement of strong customer authentication, we started seeing more soft declines, and as well merchants using more authentication. If we can start with the slides, I would just like to remind everyone of the timelines. The regulation kicked in at the end of last year, but as we discussed, some markets did allow certain flexibility, or what we call as ramp-up soft decline strategies based on purchase amount thresholds. So for the UK, the regulator had allowed the longer flexibility until 14th of September. You can see in the other markets, it varies between March and April and mid-May. So for example, the French regulator allowed further flexibility until the mid-May timelines. Belgium similarly, and those timelines also include the thresholds. I think important markets to note here are perhaps Italy and Spain. So towards the 1st of April, those markets would move to full enforcement. The regulators there allowed late flexibility to allow the providers in these markets to manage performance better. So I think these were good news for the markets. And yet, when we move to the next slide and we look at specific markets' approval rates, we would see that they did not perform as good as the other ones. So this is data for March, and it's based on the data that MasterCard shares with us as they see the full market. And you can see on average for the month of March, the success rate slightly fall back. But this is really because we see more issuers coming online with the new protocol and still new customers using the new protocol. So it takes some time both for the issuers as well as for the cardholders to learn the new authentication method. So we can see the approval rate varies per market, and in some markets it may be because of the providers and the capability to manage performance and to manage really the increased volume. When we look at the split between 3DS1 and 3DS2, as January hit, we started seeing movement from 3DS1 to 3DS2. In general, the overall 3DS volume did not drastically increase. It just moved from 3DS1 to 3DS2. How can we explain the authentication rate? So we still see a lot of high challenge rate, and high challenge rate may sometimes mean high abandonment rate. As I said, it takes time for both issuers and cardholders to learn the authentication method. UK traditionally performs really well. In this case, it's not that they actually perform that well, it's just that they don't challenge that much. So this naturally drives the approval rate a little bit higher. And I think this is highlights on this slide, but of course, if there are any questions for particular markets, I'm happy to address them later. Now, if we move to the next slide, where we discuss what exemptions are we seeing in the market. So let me help you read that graph. The biggest portion of the graph in the bottom, it's the transaction risk assessment exemptions, or this is the merchant or acquirer assessment of the transactions is low risk and hence requesting transaction risk assessment exemption. So we see that this slightly dropped from February to March. Then the next big exemption, or in this case, actually out of scope transactions, is the merchant initiated transactions. So those increased from 27 to 28% on average. Then the next big portion is recurring transactions, sort of merchant initiated transaction, but specific for recurring payments, and they increased. And the last portion here of exemptions is really the low value exemption. We see low value exemptions maybe decreasing in use, and this is because for this particular exemption, it is really the issuer who knows the threshold and whether the cardholder had reached that threshold for a given period, maybe 24 hours in that day. And I think we have one more slide. Yeah, thank you. And so this is just to see which markets are using soft declines. No surprise here, these are the markets that have not allowed much flexibility, or now in March have dropped the flexibility to a lower purchase amount threshold. We do see that the soft declines are not so much, so there is still a lot of volume accepted without strong customer authentication, or perhaps without exemptions. But as we move gradually in the next quarter, we expect higher rate of soft declines. Maybe just one more last word on soft declines. In the early days, or definitely in January and February, we saw a lot of issuers incorrectly using soft declines for particular cases. So we saw that happening for merchant-initiated transactions or for recurring transactions. And I'm sure there will be specific questions around that. Also, we saw issuers soft decline in card verification transactions. And I can explain why in these scenarios, the issuers are still, let's say, fine-tuning the soft decline strategy. And thank you.
Great, thank you so much for that, Milena. We'll dive into some of the questions we have, and please continue to send those through in the Q&A. One question we have around soft declines is if we have any visibility of success rates for retries following soft declines.
This is a great question. So first of all, we observe a very low rate of soft declines resubmissions. And this is mainly because merchants are relying on their own resubmission logic at the moment to resubmit these transactions, and they must make sure that the cardholder is still in session to authenticate the transaction. There is definitely higher approval rate for compliant transactions, so transactions that are submitted with authentication data rather than those without authentication data. But there is no clear picture whether the success rate is better than just normal transactions that are submitted with authentication.
Okay, and in terms of merchant-initiated transactions specifically, you mentioned those earlier. Why are we seeing soft declines around those in particular, and how should they therefore be processed?
Right, this is a great question. So merchant-initiated transactions are certainly not a new type of transaction. What came new, and it was a new requirement for transaction processing to meet the regulatory requirements, was how to identify these transactions. So the regulator, with a negotiation from the schemes, agreed that merchant-initiated transactions would be identified with the previous scheme transaction ID submitted with the particular merchant-initiated transaction. So this previous transaction ID is a new processing requirement, and different issuers may have implemented it at different times. Also, merchants had to start storing this transaction ID and submit it with the request. So it may happen that issuers have not upgraded their platforms to consume this transaction ID, or perhaps merchants were not yet ready to submit it. It might be also on the acquire and PSP site where this transaction is not correctly passed into the authorization message. So there are various reasons why the particular merchant-initiated transactions may not have been fully identified, and hence the issuers would soft decline them. There were certain issuers, particularly in Norway, Denmark, and Poland, that had implemented that logic incorrectly. The schemes addressed it quickly, and now we see merchant-initiated transactions improving in approval rate.
Okay. And in terms of those results and that data that we're seeing, is that consistent across the different schemes?
So across the schemes, it's definitely consistent, but it's not consistent between different markets, and especially within markets, different issuers. So every issuer, and perhaps their processors, if they're sharing processor, may have slightly different implementation or slightly different logic. And so the variances that we see are not per scheme, rather per market and per issuer implementation.
Okay, great. That's a really helpful transition into our next question, which is around the specific markets of Spain, Italy, France. Are we seeing any trends around issuers rejecting transactions with do not honors more aggressively than before, specifically in those markets?
I cannot comment that we see more aggressively. We've always had very high volume of do not honor. That does not necessarily help the merchant address the reason why these transactions are so declined. We do see a lot of issuers actually complying and using the correct response code so that they can indicate to the merchant they request strong customer authentication in these cases. And yes, as I said, it's not consistent per scheme or per market. It would depend on specific issuers. And I would advise merchants to actually, when they analyze the transaction data, to analyze it per issuer so that they know what to expect and how to interpret these response codes and whether it's something that the issuer must correct. And if you believe that the issuer is incorrectly using the response code or the soft decline as well, I advise you contact your PSP or acquirer, and they can communicate to the schemes and the issuers.
Okay, and on that note, are there best practices for retrying a transaction after receiving a 20154, specifically again in those Southern European countries?
Yeah. So just for the wider audience, it's an internal checkout response code that actually maps to the scheme soft decline response codes. And the best practices for that is really, if the merchant receives the soft decline, to resubmit the transaction via authorization with authentication. And ideally, if you have access to the authentication challenge indicator, so the challenge indicator, it's a field within 3DS2 that can signal to the issuer why the merchant requests authentication and if it is for a specific use case. And so one of the specific use cases would be because of regulatory mandate, and then the issuer knows for sure they must step up, and the next time when the transaction is submitted in payment, this would be successful authorization.
Great, thank you. A slightly broader question now around SCA exemptions in particular. And can you just speak a bit more around handling exemptions in authorizations versus in the authentication flow, and how that will kind of evolve?
Yeah, that's a great question. And it's actually at the moment what most PSPs and issuers as well support is direct to authorization exemptions. So exemptions will be supported both in the authorization flow and in the authentication flow. But in the authentication flow, both parties must be on protocol version 2.2. In the MasterCard case, also there is a sort of an extension message within 2.1 where merchants can support exemptions in 2.1 protocol, but the implementation on the issuer side is not consistent. So really we would see exemptions mostly used in authentication when the industry is ready to move to protocol version 2.2. So currently what we use and what we see as exemptions is in the direct to authorization messages. And as the slide on the brief overview showed, the majority of these exemptions are transaction risk assessment, which obviously would depend on the request side fraud level, and low value exemptions as well.
Okay, and as you've mentioned, it can vary a lot from issuer to issuer and from market to market. So if merchants are seeing specific issuers, perhaps when they're looking at their decline codes, they're seeing that some issuers are performing significantly worse, how can they address that?
Yeah, that's a very tricky question. If you have the capability of analyzing the data yourself, and if you're handling this exemption / authentication strategy yourself, I would certainly advise investigating the data per issuer so that you have a specific strategy per issuer and not only per market. And it would be good if maybe your PSP can help with the sort of smart routing and dynamic assessment of the transaction, and perhaps help you recommend both whether the transaction should be authenticated based on the market and the issuer, and if authenticated, if it needs to step up for challenge or not. But yeah, I would recommend analyzing the data on an issuer level.
Okay, that makes sense. And so when requesting an exemption, do we have a view of what the banks actually look at to determine if they will honor the exemption or not? And how can we give that exemption its best chance of success?
Yeah, that's a good question indeed. So typically issuers would first assess if the transactions fall under the regulation. So if the request comes from a merchant within the European Economic Area. Then they would assess the type of transaction. So if they can quickly identify that this is a merchant-initiated transaction, they should not be expecting authentication data and they should not soft decline, as long as the merchant or the PSP have correctly flagged merchant-initiated transactions. Then if it is cardholder-initiated transaction, they would probably look at the amount threshold and if they can apply a low-value exemption on their side, as exemptions can be both applied from the merchant acquirer side as well as from the issuer side. So if it's no low value amount, they will then look at the risk, and if they're able to apply a low risk exemption on their side. If none of these use cases apply, they would most probably look if the merchant had submitted an exemption, and they would either honor it, or perhaps if they feel that the risk of the transaction is too high, they may soft decline it. If the merchant exemption is low value exemption, they would also have to consider if the cardholder had reached the threshold. And unfortunately, for low value exemptions, only the issuer would know if the cardholder had reached the threshold.
Okay, and digging again into this topic of merchant-initiated transactions, how do we differentiate merchant-initiated transactions versus recurring transactions? There's a feeling that maybe that criteria isn't super clear. So how do we see that difference impacting the ability to soft decline in that situation?
That's a great question. I mean, from the authorization message itself, it is not consistent per scheme if the transaction would be easily identified as merchant initiated or recurring. It would be assessment on the issuer side, and most importantly, it would be that they can identify it as merchant initiated, so they know the cardholder is not in session to request authentication. It would be on the merchant side more important whether they have signed up a recurring contract and they know that, let's say, this is a strictly periodical transaction for a fixed amount, or it's something that may be more of an ad hoc, maybe a top-up transaction. So it would be a combination both on the merchant and on the issuing side by the type of merchant and the type of transaction it is to identify this as more of a subscription/recurring contract or more of a merchant initiate ad hoc request. So obviously top-up transactions are different than your magazine subscription. So it would be a combination of who the merchant is and what is the frequency of the transaction.
Okay. And taking a step back to look at exemptions as a whole, is there a certain benchmark or approval rate we expect to see around exemptions specifically?
Yeah, so I think exemptions would become very important to manage the overall approval rate. So a combination of transactions that must be authenticated. So both to help issuers authenticate those transactions that they cannot exempt, whether the exemption was requested from the merchant side or the issuer can apply themselves, and to balance this traffic that goes in authentication and perhaps may cause some disruption, dropouts during the challenge flow, and improve the approval rate in the authorization.
Okay. And we have a question around how we can support our merchants to help them achieve the best success rates by issuer and by region, going back to that point earlier.
Yeah. So I think it's important for all PSPs or acquirers to be talking to their merchants and to be giving them up-to-date information on how the markets develop. So where we saw a few markets that changed their flexibility, like I mentioned, Italy and Spain did not officially announce any flexibility at the start of the enforcement, but later on, as they saw that the particular infrastructure in the market was not ready, they allowed that. Recently, we saw that France extended the flexibility until mid-May. So important information like that would help merchants build also their strategy. Then as much as the 3DS provider and the PSP can assess the data themselves and choose whether to use perhaps protocol 2.1 or to some extent maybe fall back to 3DS1, which is still allowed to manage approval rate and performance, and it's still considered compliant in certain markets. So I would say merchants should be talking with their PSPs and their acquirers to get this latest regulatory and market readiness information to either build their own strategy or to help the PSP apply that strategy on their behalf.
Great, thanks, Milena. So I'm glad you mentioned 3DS1 because I have a two-part question that's just come through on that topic. So one is around if you could discuss the implications of merchant liability shift when it comes to using exemptions. And then the second part of the question is, what do merchants need to be aware of when it comes to liability shift if they're using that 3DS1 fallback?
Right, let's start with the exemptions and then we'll move to 3DS1. So whoever applies the exemption is actually happy with the risk of that transaction and they will take the liability shift. So if the merchant submits a request with exemption, they would be liable for that transaction. If the issuer accepts transaction without authentication, meaning that they applied some sort of exemption on their side, they will be liable for the transaction. Fallback to 3DS1 still gives full merchant liability protection, but as the industry moves towards the HA protocol and the schemes want to encourage the adoption of the HA protocol, they would look to stop the liability shift on 3DS1 transactions. The current dates communicated, and of course these things can change, but for the time being, the schemes would look to deprecate, and this is mostly Visa and MasterCard. Amex, JCB, and Diners also have communicated some dates around when they would deprecate the previous protocol. But for Visa, MasterCard, the liability shift or the DS attempt response would stop in October this year, and the whole protocol should stop be used in next year. So up until October, we can still have full liability protection on the merchant side for 3DS1, and later on, only issuers who want to use 3DS1 may give protection to the merchants.
Great, thank you. So now we have a question back at the overall market level. Are we actually seeing reduced fraud across online transactions thanks to SCA?
Yeah, actually we do. Previously we know that there is fraud even with authenticated transactions. In fact, 3DS1 was criticized for not being so secure. And on average, before we had around 7 basis points fraud rate per 3DS1 authenticated transactions. With 3DS2, or at least in the early days of the adoption of protocol, we still see some level of fraud, which is around 6 basis points. But as we see more, especially high-risk transactions being authenticated, we did see the overall fraud levels across the markets dropping in the first quarter of 2021. And we expect this to follow suit. So on average, 3DS2 for the time being has a 6 basis points fraud rate.
Great, thanks, Milena. Moving now slightly into some questions around specific industries. So the first question we have is, what differences are we seeing across industries? Are we seeing more soft declines applicable to certain verticals?
Yeah, so for the time being, the soft declines that we see are really as the last slide of the quick overview showed, was per market. So those markets that did not communicate any flexibility, and this would be soft declines across the whole board, not particular merchants. Or we see soft declines for those high purchase amount transactions in those markets where there is certain flexibility. We haven't seen specific industry or market sector being targeted. It's mostly based on the risk of the transaction and the purchase amount. So naturally, higher risk transactions that would usually receive do not honor response because issuers perceive them as risky would have received soft declines now as well. So no particular segment being targeted with soft declines.
Okay, thank you. That makes sense. And so focusing on the travel and hospitality industry for a second, what are the SCA requirements for suppliers and or merchants in that particular sector?
Yeah, so unfortunately, there was no postponement or delay for travel and hospitality merchants, and the regulation became effective as for any other sector as of end of last year or 1st of January this year. What the schemes managed to negotiate with the regulator was that, especially for this sector being so impacted with the current situation in the market and the pandemic, to use a flag such as a MOTO flag to identify these transactions as out of scope. So the regulator had agreed on this temporal flagging of these transactions for specific, in this case, specific sector and specific merchant category codes. So merchants in the travel and hospitality sector can avoid authentication by flagging transactions as out of scope and work towards the strong customer authentication or compliance solution. And in this sector, compliance solution would be in case the agent who is accepting the payment cannot pass the authentication to the actual merchant, maybe the hotel or the airline, to pass the authentication data if they're able to authenticate the cardholder, or to pass a previous transaction ID where the cardholder was authenticated, so that the actual merchant can submit these transactions as merchant-initiated transactions. So there are several options how these merchants can manage regulation, and in the interim period, while they're getting ready with the actual compliance solution, they can also use MOTO flag to identify them as out of scope.
Okay, and what do we expect that temporary timeline period around the MOTO flag for out-of-scope transactions in the TNA sector to be?
That's a tough question. I haven't seen a date until which the travel and hospitality sector is allowed to use it. the recommendation is that they work towards that solution. And as the regulators actually start assessing the compliance of these transactions, they may advise further. So I assume in this case would be most market specific, and individual regulators would assess the state of the industry at the time and if they would allow for the flexibility or not.
Okay. The next question we have is around instances where liability has shifted to the issuer. And it says, how can PSPs share data, or what data can they share with merchants on transactions where liability has shifted to the issuer to enable merchants to be better partners in blocking fraud?
Oh, this is nice. Okay, so what we like about 3DS2 is that it actually for the first time allows us to share a lot more data within the payment flow with the issuers. And when I say a lot more data, I really mean specific merchant data or data that only the merchants would have had, like knowing who the customer is, what is their shopping behavior, how often they come to that website, whether they have an account registered and they're returning customer with also user access to the merchant website, information that the issuers may use in their fraud and risk detection, and that it's not passed at all within the payment message itself. Of course, these are all new data entries for the issuers, and they need to start consuming and using them in their algorithms and risk assessment. And we actually see that issuers are not yet using to the fullest their risk-based authentication. Hence, we still see a lot of high challenge rate because issuers are not yet. I mean, every risk engine needs maybe a good 3 months to gather data so that it can apply better fraud detection models and use risk-based authentication. But so with the new protocol, the advantage of using authentication would be the ability of merchants passing additional information about the customers so that the issuers can build better behavior metrics and data knowledge of who the customer is, and the next time around apply frictionless or low risk and risk-based authentication rather than challenge the customers every time.
Makes sense. So we have another question around merchant-initiated transactions and recurring transactions. So clearly a really hot topic. So we talked a bit about how to process these, but are we seeing any broader trends around these being soft declined, even though they are exempt for SCA?
It's not broad and it doesn't happen all over the European economic area. It's per specific markets that we've seen issuers may have perhaps incorrectly set up their logic or are still struggling to identify these transactions as merchant-initiated transactions. As I said earlier, the markets that we really saw this being an issue was in Norway, Denmark, and Poland, maybe specific issuers in Italy and Spain, but it's not an overall market concern. And the rate of this soft declines on average across all the market, it's lower than 2%. And it's improving. So as I said, it's relatively new how to identify consistently across all schemes merchant-initiated transactions. And as issuers are fine-tuning their systems and merchants are also storing and building the capability to submit the previous transaction ID that identifies merchant-initiated transactions, we will see that normalizing and no more soft decline for merchant-initiated transactions.
Great, thanks, Milena. Obviously a very relevant topic to many people. We keep getting lots of questions about it. We do have about 10 minutes left in the session, so if anyone has any final questions, please do pop them into the Q&A. We have a question now about where next with SCA. So do we think that US market regulators will follow the EU with similar requirements on authentication?
Great question. We actually see, not particularly the US, but other markets definitely looking at how PSD2 would behave and what would be the outcome. As let's not forget, we are doing this not to just bring friction to the market, is to improve the security of electronic payments, to bring back the confidence of cardholders using their payment methods in electronic and remote environment and improve the approval rate. So, of course, it started with some bumps in particular markets and we're still adjusting adjusting to the protocol. But if ultimately we achieve the goal of reducing fraud and improving the approval rate for electronic remote transactions, I am sure that the other regulators will follow suit. We see in APAC, certain countries are implementing some sort of domestic rules around strong customer authentication, in North Africa as well. Yeah, and it's yet to see how the US market will pick that up.
Okay, great. Another question on a more future-facing question, I suppose. So where do we stand on delegated authentication? When do you think merchants will be able to leverage it? And of course, if you could say a bit about what it is, why it's important.
I love that question, and I can't wait for delegated authentication to be more widely adopted. So delegated authentication, first of all, the regulation allows that the second factor of authentication can be applied by a third party and not necessarily the issuers themselves. So merchants can build such a solution that they control the second factor of authentication, or perhaps if it's a merchant who already has a user credential access to the website, they can just build that in a compliant with a PSD2 requirements solution, and so they can apply the second factor of authentication at the point of entry. Delegated authentication will be supported with protocol version 2.2, so the industry must come on to the next protocol to be supported. And the solution that the merchant or a third party on their behalf would come up will have to be certified with the schemes. What advantages this would bring is basically consistent cardholder experience, regardless of who the issuer is and how they handle the challenge on their side. If the merchant, for example, is capable of handling this in a more unified and user-friendly way, they may use delegated authentication.
And a follow-up on that, what do we think are the most mature markets from an issuer perspective?
Certainly the UK, it's one of the best 3DS in general markets. We see as the first slide on the quick overview showed, the Nordic countries are actually getting better with authentication. In the Nordic countries in particular, because cardholders are so used to some sort of friction and security in their electronic payments, they are more tolerant. So it's not a dropout effect, is just a matter of learning and getting to the new protocol. So we see better performance in these markets. Central Europe is also doing great. I think it just takes time for both the issuers to get adjusted to the new process and also to the cardholders to get to know their new authentication method.
Okay. And in terms, going back to the point you were making earlier around 3DS1 and 3DS2, are we starting to see a drop in acceptance rates where transactions are submitted with 3DS1?
That's a very interesting question. And indeed, we saw in some markets, and again, it's not across the whole market, maybe specific issuers tend to prefer 3DS2. So if it is a transaction under the regulation, both the merchant and the issuer in the European Economic Area, the issuer supports the HA protocol, we may see some transactions authenticated via 3DS1 being declined. In theory, this is incorrect at the moment, as both protocols are allowed in this transition period, and issuers should not be rushing to decline 3DS1 transaction, but yes, it does happen, and it's on an issuer presumption.
Great, thank you, Milena. So I'm just going to ask the final question now. This has flown by, but again, if you do have any leftover questions, please do drop them in the Q&A now, and we will do our best to follow up afterwards with an answer in case we can't get to them now. So this is a question around do not honor codes, and if we're starting to observe a drop in do not honors with the movement towards SCA, and whether do not honors are perhaps being replaced by soft declines with 20154, what trends are we seeing there?
So definitely we saw a shift from do not honor to specific soft decline for the reasons of strong custom authentication required. And this is already good insight to the merchants that they would know for these particular transactions, the issuers are assessing them as high risk. We still do see some issuers using do not honor. The schemes are actively trying to improve the response codes, not only from strong custom authentication perspective, but from overall insights to the merchant so that they can improve or correct their processing. There is another important change coming in April. So both merchants as well as issuers will have to be more diligent with the response codes, and issuers should use the response codes more correctly, while merchants should not be abusing the resubmission logic that they may have had on their side. And so if an issuer responds with what we call a hard decline response code, merchant should not be reattempting. And if it's a soft decline type of response code, a decline that would signal to the merchant that either at this time or with the given transaction parameters, for example, non-authenticated transactions, the issue is willing to approve, but with a resubmission, the merchant should act on those. So I think besides moving towards 3D secure in the next months, we would see better use of response codes and more strictly on the let's not abuse the resubmission logic and keep resubmitting transactions to issuers that we should not.
Great, thanks for that, Milena. So that's brought us nearly to the end of our time. So I guess, Milena, do you have any final closing thoughts or any words of wisdom you'd like to share with our audience before we go?
Yeah, thanks, Emily. It went really fast. We share the same concerns as most of the questions were raised on this webinar. We still see inconsistent cardholder experience and approval rate across the different markets in Europe as the issuers are getting better with their soft decline strategy, so the incorrect soft declines, as well as with the authentication flow. There were a lot of changes in the authentication itself, so issuers changed either their authentication method, like for example, we had a big drop in authentication transactions in Denmark because they moved to a new authentication method using their national ID. So the cardholders need some time to get adapted to this new authentication method. Also, we saw some issuer changing the user experience or the user workflow, and this also caused a lot of dropouts or confusion between cardholders how to complete the challenge. We also see that we have now better approval rate on, actually we did not speak about browser and in-app purchases, but we see that both issuers together with merchants and with the more production testing, we are getting better with the overall authentication and approval rate in authorization.
Great. Thank you so much, Milena. And thank you so much for your time today. I think I speak for everyone when I say this has been really insightful. So thank you for joining us. And thank you so much for everyone who's tuned in. I hope you found it useful, and thank you for those great questions. Really interesting discussion. And we will be following up on any questions we didn't get the chance to answer. And yes, so thank you so much, Milena, and thanks to everyone watching. And the recording will be available afterwards as well. So thank you for that.
Thank you, Emily. Thank you.